This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Israel's oil refineries said on Sunday it had partly resumed activities at its Haifa facility, which was shut down following an Iranian missile strike 2 weeks ago. Israel's oil refineries, or Basin, said in a regulatory filing in Tel Aviv that it was gradually restoring operations and would likely be fully operational by October. It noted that it holds insurance covering damage and profit losses of up to $250 million caused by acts of terrorism and war. The company said on June 15 that its pipelines and transmission lines in Haifa had been damaged by Iranian missile strikes, which killed 3 employees, and that it was examining the impact of the damage on its operations and implications on its financial results.
Oil prices fell on Monday as an easing of geopolitical risks in the Middle East and the prospect of another OPEC Plus output hike in August improved supply expectations amid persistent uncertainty over the outlook for global demand. Brent crude futures fell 12 cents, or 0.18%, to $67.65 a barrel by 0718 GMT, ahead of the August contract's expiry later on Monday. The more active September contract was at $66.56, down 24 cents. Last week, both benchmarks posted their biggest weekly decline since March 2023, but they are set to finish higher in June with a second consecutive monthly gain of more than 5%.
Moving on to the top news in the energy sector.
Singapore boosted the share of renewables in its power generation mix to a record high in May, an analysis of the latest market data showed, as the country ramped up renewable imports and accelerated local solar power generation. Domestic solar generation in May rose at the fastest pace since March 2024, and renewable imports rose a third straight month to their highest in more than 2 years, lifting the share of renewables in the city-state's power mix to 2.58%, data from the National Electricity Market of Singapore showed. Cross-border power trade is seen as key to easing regional reliance on fossil fuels amid growing data center-driven power demand.
Dutch and British wholesale gas prices edged lower on Monday morning as supply remains strong with rising demand from warmer temperatures across much of Europe offset by weaker demand for heating. The benchmark Dutch front-month contract at the TTF hub was down €0.55 to 32.35 euros per megawatt-hour, MWH, or $11.11, MMBTU, by 0802 GMT, LSEG data showed. The Dutch August contract was down €0.57 at 32.88 euros per megawatt-hour. The British front-month contract was down 1.1 pence at 75.50p, therm. Next, we have the top news in metal markets. Copper prices on the London Metal Exchange and Shanghai Futures Exchange traded in a range on Monday, as investors awaited progress in U.S. trade talks and clarity on potential copper import tariffs. 3-month copper on the LME eased 0.06% to $9,872.50 per metric ton as of 0700 GMT, but remained on track for a 3.92% gain on the month, marking its second consecutive monthly increase. The most traded copper contract on the SHFE gained 0.16% to 79,870 yuan, $11,150.36. a ton, which was also up for the second consecutive month, being 2.8% higher on the month.
Dalian iron ore futures edged higher on Monday, logging their first monthly rise in 4 months amid firm near-term demand in top consumer China, although a protracted property crisis kept gains in check. The most traded September iron ore contract on China's Dalian Commodity Exchange ended daytime trade 0.21% higher at 715 yuan and 50 fen, $99.88, a metric ton. The contract gained 2.06% in June. The benchmark July iron ore on the Singapore Exchange lost 0.16% to $94.04 a ton as of 0746 GMT, falling 1.3% this month.
We will now look at the top news in the agricultural sector.
Ukrainian export prices for sunflower oil have been rising for 2 weeks in a row amid rising global oil prices, analyst APK Inform said on Monday. Ukraine is the world's largest exporter of sunflower oil. The consultancy said that sun oil demand prices reached $1,105 per metric ton carriage paid to CPT, Black Seaport as of June 30, 2025, or $10 higher than 2 weeks earlier. Ukrainian sun oil was traded at between $1,095 and $1,100 per ton as of June 25, APK Inform said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.